Hi there. Welcome back to Prices at the Pumps, our weekly chat with fuel expert, energy expert Dan McTeague. And Dan, a few things to talk about today, but let's start where we always do when we chat. Prices in this region, Nova Scotia, Newfoundland and Labrador, Prince Edward Island. Where are you seeing things headed this week? Gas, diesel, home heating, etc.
Yeah, I mean, I would say diesel might go up a little bit and gasoline might actually drop a little bit. But given the absolute panic and fear and pessimism on energy markets, created no small part by the intention of central banks to raise interest rates, you have energy traders, basically, paranoid about what this could do. And of course, nothing could be further from the truth. They're not looking at the fundamental supply and demand. What it means is that we're pretty much where we are now, but I think we're going to see gasoline drop maybe another penny or two. And I think diesel, which I had penciled in would drop or increase 2 cents, may not move at all. Although, I've been proven wrong before many times. Hard to predict what bureaucrats think. But I follow Oil Price Information Service, and that's the service I pay for every month. Yes, out of my own pocket. And that's the one I use to as benchmark and guide. Actually, so does the entire country. And so is the entire North America. Yeah, they use Platts and they use Dow Jones and a bunch of others, but the benchmark is always OPIS. And so that's indicating the best case scenario, no change at all, but more likely given the route we're seeing in the markets today, the pessimism is unbelievable. It means that we could actually see a bit more of a savings come Friday here in Nova Scotia. That also applies, of course, to New Brunswick and to PEI.
It's interesting in the world of energy markets and oil and everything else, how things can change moment by moment, hour by hour, day by day. When we spoke last week, you were feeling that perhaps the trend of some downward weeks in terms of pricing was over and that it would go back up. And just before we started recording, you were saying that there's kind of been a bit of a collapse in the market.
Yeah.
So as best as you can, in layperson's terms, what's happening?
Yeah, what's happening is the shock, horror, that panicky type of feeling. Nothing is of value when markets believe that the U.S. Fed in particular, but other central banks are committed to interpreting good economic news as actually bad news. And in terms of demand for all oil products, which of course aren't going away anytime soon, not in my lifetime, not in yours, it looks like markets are really spending too much time going for the head fake. And the head fake truly is the threat of rising interest rates. We've seen that happen. We've seen it rise dramatically. And it hasn't had any appreciable effect on demand because people still need to get from point A to point B, Scott. And so for that reason, what we're still seeing is that panic, that leftover panic. Now, I just saw this a few minutes ago. One of the U.S. Fed representatives, Bullard, had actually come out and said, I think he represents St. Louis, they have some of the federation, came out and said the market is overestimating the impact of these high interest rates or higher interest rates and is enormously, bearish. And it shouldn't be because the market is very strong. And so they're now starting to wonder if the market itself is acting in a way that is completely out of proportion with reality. What that means is short-term gain, long-term pain. And I want everyone here on the SaltWire Network to understand that even though prices are dropping relative to where they were, say, last June, when we were in the $2 range and pushing $3 for diesel by September, we could very well revisit those prices because there is a significant increase in demand. OPEC's Jody, the Joint Office for Information Development for Oil, has made it very clear. December saw the largest demand for oil products recorded. And so for that reason alone, we have to be very fearful that these lower prices are in fact going to increase demand and make a bad situation worse on the supply side. 10 years of underinvestment in oil and gas is starting to rear its ugly head.
What other things are you seeing globally in markets right now and trends that are kind of giving you a bit of a crystal ball into where things may be headed out of the energy sector?
Well, I would think the numbers themselves, as we head towards springtime demand for oil products, it looks like the supply simply won't be there. I also note the continued weakness of the Canadian dollar. That's not an accident. That's not what's happening around the world. Yes, the United States, the U.S. dollar is extraordinarily strong and people see it as a hedge. But at the end of the day, Scott, We've seen the United States dollar used as a hedge, but it was always understood that the Canadian dollar had an advantage over that hedge, and it was called the petrodollar. We've lost that status. We've explained here many times why that is the case. When you block pipelines as a policy, you impose restrictions on investment in the very thing the world needs more of, not just oil and gas, but Canadian clean oil and gas. There are enormous consequences. I was explaining to a photographer here not too long ago, whose mother follows you on SaltWire, and said, it's interesting, the gas prices, what would happen if the Canadian dollar were on par and behaving like it did before when we actually sold oil and gas to the rest of the world, and there was actually a business case? Well, you'd be saving 24 cents a liter. And that doesn't include HST. So it's now 25 cents a liter. Now think of that 25 cents a liter as a proportion on the $1.50 that you're paying right now, and multiply that to every other commodity that we use in this country, because it's all based on the U.S. reference benchmark. What it means, inflation is being driven by a weak Canadian dollar. Yes, there are other factors, but the elephant in the room is the weak Canadian dollar and the destruction of our purchase power. And the longer politicians and their friends and advisors, and pundits continue to ignore that, the longer the pain for Canadians, because we are in total denial.
It's interesting because, myself, when I think of the Canadian dollar versus the US dollar, I think of it in terms of, well, if I travel to the States, the exchange rate is this. So if I have 1,000 Canadian, it's going to be this much American, and that's my spending power if I make a trip. If I don't make a trip, it doesn't affect me. However, as you've explained before, maybe I'll just keep it touch on it again. What do you want Canadians to know about that relationship between the value of the Canadian dollar versus the US dollar, and how it really does affect Canadians on a day-to-day basis?
Yeah, everything we buy, it doesn't matter. It's my glasses, my cell phone. The cost of living is very much determined by our ability to attract capital in the country, to make our dollar robust, and to be able to stay on an even keel with our number one trading partner. And we are their number one as well. That is the US dollar. And policies that deviate, abrogate, derogate, call it what you want, move away from that, really punish consumers. Now, what if I said that your gasoline price this year will be about $750 more expensive than it ought to be, simply because of the Canadian dollar? I don't know about you, Scott, but $750 with a family of 5 goes a long way. That buys a couple of weeks of groceries. And so when you think about not just fuel, but that makes its way into everything else that we consume, including, of course, food, fuel, furnace oil, etc. It is high time that our friends in Ottawa and at our legislatures get off their high horse and start looking at the reasons, the fundamental cause of inflation that is eroding the purchase power of every Canadian. And look, I'm not being political. I spent 18 years as a member of parliament. I know what I'm doing. I know what I'm talking about. That's why I'm able to predict prices. Start focusing on the dollar. Let's start getting more investments and capital back into Canada, especially the stuff the world desperately wants, in which they're visiting us for, whether it's Japan or Germany. They all want more Canadian oil and gas because we do it the best. We're clean, and we spend a lot of money making sure that we have the number one ESG rated fuel in the world. It's not a PSA for the oil companies. They don't like me. I don't like them. My predicting of gas prices causes them to lose tens of millions of dollars every year. My point is that this is good for Canadians, as it has been in the past, and we don't need debt. We need is investments, and we need this economy to be much stronger. Let's do the green things, but let's do it understanding that you're not going to do it without oil and gas anytime soon.
We'll wrap up with you here in a moment, and this may be a tricky question, but I'm going to ask you anyway, because that's what I do, and you're always happy to answer. Why do you think there isn't more discussion, certainly in the political hallways, and from opposition members, whether it's federally, provincially, et cetera? Why isn't there more talk about this relationship between the Canadian dollar and the US dollar, and right now the relative weakness of the Canadian dollar? Why aren't we hearing more about it as general public Canadians?
Because it's inconvenient. It demonstrates their policy of focusing so heavily on renewables and on just transition, on great reset and build back better is malarkey. And it is really damaging the effect of the economy to make the transition over a longer period of time. It's political demagoguery that's responsible for this, not sound economic policy. And so we do need a reset in terms of our thinking around the priorities that we have as Canadians. And I think, Scott, when you look at 50% of people now saying they can't make ends meet, they're not doing well, they're borrowing their credit cards, they're borrowing from friends. We have a real problem in this country. I don't want to go and say it's broken, but I can't think of any other way of demonstrating that as long as we have a weak Canadian dollar, it is an absolute demonstration and a failure of policymakers to address the fundamentals. We're not attracting capital into Canada. We were up until last year, but that's only to buy for people, foreign buyers, to buy some of our housing stock. That's no longer attractive. So we need to get back in the business of being attractive, and it shouldn't be Vladimir Putin. It should be Canada.
Dan, I know that you welcome civil engagement, particularly on social media. So when you're not with us here on the SaltWire Network, where can folks find you and reach out to you and perhaps, have a discussion?
Yeah, sure. I mean, look, affordableenergy.ca is where I put my blogs up, some of my ideas, and I crystallize those in terms of the things I put out there. I can also engage me, of course, Gas Price Wizard on Twitter. But between those two, there's plenty of opportunity for respectful discussion. But if you're going to come at me from the position I'm a liberal and they're great, whatever, look, I was a Liberal MP for 18 years. I worked in the trenches of that party 18 years before. It's not the same party at all. And I've been there, done that, wrote the book. But at the same time, this is not about partisanship. This is about ensuring that Canadians have what they've come to expect, a country that provides them a decent standard of living. I think that's something we can all agree with, no matter how we come about it. Let's head in that direction.
Dan, as always, appreciate your time, your expertise, and your input right here on Prices at the Pumps, only on the SaltWire Network. Be well, take care of yourself, enjoy the rest of your day. Have a great rest of the week, and we'll reconvene next Wednesday.
We will certainly do that, Scott. Thanks so much.
Thank you very much. Be well.